The best times to trade forex. In this video you will learn what multiple trading sessions are, how different trading sessions have unique characteristics, when forex trading sessions commence, how different forex trading sessions work, what overlapping sessions are, what times to be cautious. The forex market has a significant advantage over other markets because it gives you the ability to trade 24 hours each day throughout the week. The day is made up of 3 trading sessions: the European or London session, the American or New York session, and the Asian or Tokyo session. This is due to there being no central trading exchange and because different countries start work at different times. When London traders stop working, New York traders are still working. When New York traders stop working, Tokyo traders begin work. Because each session is driven by an active economy, each trading session will have its own characteristics. There isn't necessarily a best time to trade. A country's currency will likely be traded in higher volume during that country's active working day. For example, when Japan's working day starts during the Asian session, companies in Japan will need to buy and sell currencies in order to do business with other countries. This causes high volume turnover in yen as it gets exchanged during business transactions. When business in Europe opens, businesses will transact in euros, pushing the volume up as European companies make transactions with other countries. When Europe closes for the day, the volume of euros traded falls. Therefore, whichever session is active at the time will directly correlate with the type and amount of currency being traded. The trading week starts with the Asian session when Tokyo opens, and finishes when the New York session closes at the end of the week. However, your location in the world will depend on what time of day this is. If you're in Japan, the trading week starts on Monday morning, and if you're in the UK, Sunday evening. Looking at the table, you can see the different trading sessions throughout the world, based on GMT. You can see that the Asian session starts at 2200 and closes at the New York session at the same time, 2200 GMT. Let's now look at the characteristics of each trading session. The Asian session starts at 2200 GMT when Sydney opens. Because Sydney is only trading at this time, the volumes are small and the price changes are likely to be minimal compared to other sessions. At midnight GMT, Tokyo opens and trading volume picks up. Due to Australia and Japan being fairly small markets compared to Europe and the US, price changes are relatively moderate on comparison. The spreads on major pairs are also slightly higher during these times because liquidity is not as high. The Australian dollar, New Zealand dollar and the Japanese yen are mostly traded during the Asian session because they're the most domestic currencies of the major markets open at that time. The European session opens at 0800 GMT when the London session opens for the day and Tokyo has an hour of trading left. At this time, a large number of traders are active in the market, resulting in larger price moves compared to the Asian session. During the European session, there are higher volumes traded, resulting in smaller spreads. Liquidity is also very high during the London session, with almost 38% of total volume coming from the London market. Trading when the London session is open is a good start to ensure that you are trading in optimal market conditions. At 1300 GMT, the New York session starts for the day, joining the active London session. This combined number of participants increases volatility and volume substantially. At 1700 GMT, the London session closes and traders go home for the day. At this time, the New York session trades on its own until the Asian session reopens. In this table, the darker circles show where trading sessions overlap each other. Tokyo and London share an hour when the Asian session closes and London opens. London and New York are very active as they share 4 hours of trading between 12 o'clock and 5 o'clock GMT. There are considerably more traders trading at these times, which affects market volume and liquidity. The higher the liquidity, the less slippage a trader is likely to get, with more orders getting filled and currency spreads remaining small. You should be cautious during national holidays such as US and UK bank holidays, as these can affect market conditions and causing lower market volume and poor liquidity. Another time to be cautious is during certain times during the trading day when news and market reports are released. At these times, the impact can be dramatic, causing prices to move rapidly. The publishing times of these news announcements are freely available ahead of time, and so volatile conditions can be easily avoided. So far, you have learned that forex is a 24-hour market. It is made up of 3 main trading sessions: the European, American, and Asian session. Each session has unique characteristics due to the countries and the companies that are exchanging currency within them. The trading week starts with the Asian session at 2200 GMT Sunday evening and finishes at 2200 GMT with the American session on Friday evening. The European session is the most active session and accounts for most of the volume traded in the forex market. The American session opens at 1300 GMT, halfway through the European session. With the combined markets of the American and the European session open, volume and volatility is significantly increased. When sessions overlap, market activity increases. These are some of the best times to trade forex. There are certain times when caution is needed, specifically during news releases and national holidays.